Hello, I am Wael Yahya, Certified Financial Technician from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods to the S&P 500 index over the short term. As usual, we will check the major structure and some important long-term views. First of all, the index was once upon a time in an uptrend over the long term, and this was identified over the weekly chart, but later on it started to drift in a sideway. This sideway formed a reversal pattern, which was a giant head and shoulders with a neckline running through 4,245. This level is very, very important. It's critical. After the completing of the reversal pattern and its confirmation of the reversal, we had a well-established downtrend over the weekly chart formed of lower highs as well as lower lows, and these are the details of the new established downtrend. It's clear that we do have lower highs as well as, of course, lower lows, and here is the channel line. So the index now is correcting and it is moving against the prevailing long-term downtrend. The short-term wave, especially the ultra-short-term move, is approaching an area of triple resistance, and this area is considered an area of much trouble. First of all, short-term resistance over the daily chart at around 4,180 points. Later on, the neckline of the reversal head and shoulders at the critical 4,245 level, and the major weekly downtrend. So it is clear that the index is almost at the lower boundary of this area of triple resistances. The most important one, the one you should write down, is 4,245. 4,245. As long as the S&P 500 index is below this level, the major outlook and the long-term perspective is bearish, and things are not okay over the long term as long as the index is below this neckline, and of course as long as it is within the major downtrend channel. Concerning the short-term correction, we do expect it to continue a little bit more, maybe a little bit more, and the correction is considered intact and continuous as long as it is within this yellow ultra short speculative upward move, and as long as it is below the ultra short term support around 40.80. This number is very important because as long as the index manages to close above this level, either on daily basis or on weekly basis, we will consider this corrective move is valid and intact and able to continue much further to the upside as long as it is above 40.80. So keep in mind, this is our stop loss level. You may name it your safety level, and the ultra short term view is considered okay, relatively positive, as long as we are above 40.80. Any break below this level will be considered negative. Why is that? Because a break below 40.80 will indicate a kind of reflection from the resistance. You can see if it fell below 40.80, this means that we started to form a peak, and this peak will push the index more to the downside, at least around 3,950 points. So keep in mind that although the speculative ultra short term move is not as strong as predicted or expected, but its intact is critical for the correction to continue, and any price action outside this upward ultra short term move will be considered a peak in the process of formation and a kind of reflection from the area that we have just talked about with the triple resistance. So we need continuous closing above this level, which is 40.80. Okay, when do we expect that the S&P 500 may be positive over the long term? After a valid break above the 4,245 level and a valid break and confirmed break through the downtrend line. Of course, this is too soon to talk about, too early to discuss this, because we are just starting to test the area of the triple resistance. So there is no need to discuss the breakthrough now, because this will take more than a week, maybe 2 weeks, maybe 3 weeks, and of course we will update the index on weekly basis. So it's too early to talk about the positive outlook, even if it is of low probability. We should not talk about this right now because it is too early. For the time being, keep in mind that in order for the corrective wave to continue against the prevailing major term downtrend, we need a close on daily and weekly basis above the 40.80 level. And keep in mind that as the index approaches 4,245 level, things may get into the seller's control area. So take care of that. That's it for now. That was our detailed analysis of the S&P 500 index. Thank you for watching. Please like, share, and subscribe. See you soon.